Good morning, it's Jonathan Barrett with the Week Ahead report. It's Monday the 19th of July, and it's going to be an interesting start to the week, particularly with the way the Dow behaved on Monday. On Friday, down quite aggressively. We'll quickly do a little bit of a recap there, talk about the major economic data coming out, and also talk about some of the trades which we've got on at the moment. See how they're faring at the moment as well. Okay, let's just have a quick recap of the events. And where are you, events? That's the one we want. The events that occurred on Friday. Here we go. Okay, just having a look here. Let's have a look at the overview. That's a lot easier there. Skip that ad. Thank you. The Dow was down 2.52%. Expect our market to be pretty weak as well. The S&P was down 2.88 and the Nasdaq down 3. The Stoic was down 2. The FTSE down 1.1%. The CAC was down 2.2 and the DAX was down 1.77. So quite bearish. On the local markets, the futures, particularly for the SPY, down 79 points at 4,327. So quite aggressive on that. Obviously, we had to expect it, just purely because the market was quite aggressive to the downside. Those numbers, particularly in the States, also weren't awe-inspiring, particularly those CPI numbers. But as a result of that, we did actually get quite a large sell-off in gold. But let's have a quick look at that. Okay, let's just look at some of the instruments, what's occurring last night. That's a bit of a move there for that Aussie. But let's have a look at the dollar index. 82.63 is where the dollar index. A little bit of a bounce, only a slight bounce towards the close. Interesting to see how long that will last. But let's set that up on the hourlies, on the dailies. Momentum indicators are pretty flat. We could say we're just bounced off this support area here. So it would not be surprised to see a short covering rally commence. We seem to be quite well positioned for that, particularly with our position on the Aussie. But let's see how that unfolds. Speaking of Aussie, up the stairs and down the escalator, that is something that is not new to us. And as you can see, that's quite an aggressive move the other day down. Now, we did get stopped out of half a position, as we mentioned on the tweets. We also added to the position as well on a break of the last night's low on Friday. And that's actually held us in a good position. And when you actually look at what occurred, it's actually quite nice. Obviously here, probably adds on a break through 86.50, but this is these breaks in your lows where it just seems to be edging lower and lower and lower, and that's particularly how the Aussie does trade. So I think a break through that 86.30 would provide some good dividends. Just remember that Aussie does trade quite aggressively when it decides to move to the downside, so I'd just be a little bit cautious. The big range here is that high of 88.50. Obviously, if it breaks through that top side, we're wrong. It's 88.70 was that high, and the lower end's right down here at 84. So I think there's more downside there, or strength for the dollar, weakness for the Aussie to come. Okay, gold, a big mover and shaker there. Quite an aggressive thing. As you can see, right on that support level. Let's see how it does unfold, because these are very important levels. We are long the gold, as you know, but our stop is below that area. It was actually, we didn't get as low as where we would expect it to stop us out. In fact, we're actually still long. The low was 1185.75, and for those that know where my stop was, it just managed to stay in place, so that's actually quite encouraging. Okay, so that's all right. If that area goes, we've got concerns for that overall bullish scenario for gold, and as we have said several times, a break through that level puts in question the entire move for gold, for the year. So stay close to that one as well. Copper in itself, 292. We were in two mines last week, failed to do anything there, which was good. Still under pressure there. And as you can see, she's coming back. But I still feel this is a consolidating type of pattern. So up until it breaks through that low there, through 284, we have to assume that it's still consolidating. But at the moment, risk is to the downside. Holds to there, maybe a little bit lower, but definitely if it breaks through 272, the copper market is a lot deeper. Okay, have a look at the local markets now, and then we'll look at some of the grains, because we've got positions there. Looking at the local market, the SPY 4,327. 4,327, and as you can see, it looks like it's in a corrective phase. This is all reasonably good stuff, constructive. Probably expect it to come back a little bit, but this 41.50 is the key for us. A break through that level, then the market will consolidate for some time. The question we've got to ask ourselves is whether or not we put our hedge back on. And that's something which we're all starting to think, particularly after that move we had in the States. And we've got to see whether or not that economic data today will conclude the same, or the economic data this week. Having a quick look at some of the grains now. Wheat, as we all know, still looks good. I mean, this movement here is still looking like it can trade higher. Don't be disillusioned. Trading these markets, break to new highs is always the way to go. We'd left corn wheat because it had already moved, but we're long corn and happy for being long corn. And obviously a break through that high there, 3.97 or 4 cents higher. Soybeans, 10.20, and looking again at that hourly chart, you can see that that it still looks quite solid. So I still feel that grains still look the way to go. Sugar, just consolidating as well, and as you know, we're looking at this as a trade as well to see whether or not it can go onwards and upwards. Okay, now for this week, what's the most important stuff? I think really we've got to look till, I guess, of any sign. If we look back, I think a Tuesday is probably the most important bit of data, but we don't have major data except for, I guess, leading indicators out in the US on Thursday. But Tuesday there's a bit of data there. Housing starts and building permits in the States, so that I think is going to be widely watched. Then there's not a lot around. Westpac leading indicators on Wednesday for Aussie, and some, but that's about it. But really, Bernanke monetary, that could be quite interesting, but not a lot there. But I think when we go to Thursday, that's probably the key. Thursday in the States and in the UK, we've got retail sales, industrial new orders, which will be good in euro. We've got leading indicators and existing home sales in the States. That, to me, will be the key for the week, because when we go into Friday, there's not a lot there in the US, so things are pretty quiet. So overall, I think let's just see what sort of a week will unfold. I think that basically the market wants more data, wants to see how things are actually moving in terms of the economy. In terms of our positioning for this week, we're long US dollars, expecting a little bit of a bounce there via short Aussie, obviously because commodities might come under a little bit of attack, particularly gold. Keep an eye on that 11.85 on the gold. A break through that, I think, questions where we're going for some time. And obviously with the grains, we're still along there waiting for any form of reaction. Still a lot of hot weather going there, particularly in Russia. Well, that's about it for me. I hope you have a great week, and we'll certainly talk to you tomorrow.